Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. July corn continues to trade on either side of the 369 key level. And around this number here, we're looking for the market to either make a definitive move to the upside or to the downside. We want to point out, however, that the market now is starting to create what looks like a mirror foldback image. And in terms of that mirror foldback image, we're looking at this significant low, which is the head of the inverse head and shoulders formation that we talked about, where we have 2 points then showing that we have potential lows coming in for the market to reverse back up off of. On either side of these levels, though, we now have a mirror top just shy of the 380 mark, where we have 377 and 3/4 previously. Then 2 days ago, we have 377 half. What that then suggests is if the market's able to make a low just below this 369 number as it did back in March and hold this number, the next leg up could potentially be the move that makes an advance that tests 390 to 400. We'd then be looking at a move that potentially traces up against our 2x1 angle, moving into that June 15 mark that we've been discussing as the potential threshold for a high watermark for this contract. Previously, this market found 365 as good support, which at that time was the volatility-based support level. We then are approaching this level, but this time that 365 half number coincides with our 45-degree mark. Once again, we would very much like to see this market hold very close to that 369 to 368 number and turn back up from here. And that also seems to coincide with our sinusoidal wave action on the way back up potentially. Right now, the key number overhead that we're looking for is for the market to potentially close above 375 this week. Doing so would be very positive, but as long as we stay above or close to 368, 369 this week, that too could be a very good sign depending on what kind of weather we find going into the weekend. The December corn action is slightly different, where we have sequential higher lows coming in for this contract. This most recent low then shows us that the market's come in. If we're able to post a fourth consecutive higher low, that would be very bullish for this market. That would in some ways form a triangle formation. And off of this area here, we could see a very nice explosion to the upside in the event that the market's able to hold against these sequential higher lows. The key number then we'd be looking for is about 386 for the market to make a nice low, and with the overhead highs coming in near about 394, 393. The end of this gray region for this market is a zone for a potential change in trend, and what we find right at the end of this gray box, the market came in and made a nice little high here. So the small pullback that we're looking at, so long as the market is in fact able to hold, is not a bad thing. It is consistent with what we would have been looking for a potential turn. Additionally, you can see the last time that the market reached one of these vertical areas, the market moved up into it and then turned back down. And as you can see at the beginning of this zone here, the market dropped into it and then turned back up. And so these areas of the market can mark for us potential changes in trend. Even though the market's been sideways, it's given us some insight as to where short-term reversals may occur. Seeing that the market is now dropping out of this gray zone, so long as we find good support near that 383, 384 area going into the rest of this week, we continue to like corn potentially to still find some strength to the upside. July beans continues to fight to hold the 940 area of support where it made back in early April. We got a retest this week and last week, and the market is bouncing off of this area. Although a marginal breakdown to about 930 to 920 would not come as a big surprise. Here the market is continuing to hold that 940 number, and if it's able to continue to do so this week and make its way back above 960, we could see some potential strength starting to creep back into the soybean contract and giving it an opportunity to make its way up. We do have a time factor coming in early in June, and in the event that the market simply continues to trade sideways going into this mark, we would not be surprised to see a nice move to the upside coming off of this area, lending itself to potential strength. Another reason for the bounce that we're seeing is that the market did reach our end band up against volatility-based support. In doing so, the market will often bounce for about 5 to 7 days. We're now in day 4 off of reaching that end band low, and so a few more days of consolidation again would not come as a surprise. The market has now made a shift. We had our previous volatility band coming in near this area of 996 to 1010. Now the market has dropped, and you can see clearly here the shift is now occurring where a new band could very well create itself right along the area where the market is trading right now. So we continue to like potential support near this 952 to 940 area, but breaking back down, as we mentioned before, potentially touching maybe close to 930 would not come as a surprise, but it looks like this area of support could very well hold for some time. We essentially have the exact same chart pattern for the November contract. The level of key opportunity we'd be looking for on this contract this week is 950, with the next level overhead coming in at 963, which would be the point of control. Down below, we're looking at 938. And so these areas this week are going to be some very key levels for this market, where 938, in the event that the market were to drop down to this area, should prove to be reasonably good support. Bouncing up above the 950 number, the first area of resistance again would be 963, and this would indicate that the market does want to move its way up and perhaps trail up against our 2x1 angle. The 950 mark happens to coincide with our 135-degree mark, and overhead the 180-degree angle also happens to coincide with that 960 plus number overhead, and so these are going to be important levels to have on our radar for this particular contract. Here we can see that volatility-based support has made a shift. Where the market previously had been overhead, we can now see that a shift is now occurring, with a good chance that the 938 to 933 area is going to be where the next band establishes itself. And so the market coming in, even if it were to break down, should find good support here, at which point we can then see the November contract start to make a good move to the upside going into the summer. The week complex continues to battle, and here we can see the July contract found reasonable support near 422. After having bounced off of that area, it moved up to our 2x1 downside angle, which is exactly where it found resistance, and bounced for about a day or two. Today we see the market is actually finding reasonable strength up against our 1x1 downside angle, and from here we suggest that the market would find potential strength above and potential weakness in the event that it goes below. We can see that the market was oversold where it made its bounce, but the strength of the move to the upside does not look as steep or as strong as it did previously on the last time it made an oversold move to the upside. So from here, we would be looking to see if the market can, in fact, eclipse the previous high that it's made, and in doing so, it could potentially find some legs. With the overbought, oversold indicator that we're looking at here, the market may continue to oscillate, but as long as it makes consecutive higher lows, some strength could come into the market where it could then eventually creep its way back up to a potential retest of the 961.5 number. A couple areas of note for this contract, once again as before, would be resistance overhead at 440.75 and potential support coming in at the 420 mark. Not much more can be said here for the December week contract, as it looks very similar to the predecessor. Here we can find that the recent lows that we found near 452 coincides with one standard deviation below the point of control at 453. So from here we can see that the market found some price stability and has since moved up. Overhead we have resistance for the market coming in near 975 in the same pattern that we see coming in. This week, holding above 463 is potentially a sign of good strength. And again, we're looking for the market to potentially make sequential higher lows. And in doing so, we can see a market that moves up, potentially to retest the 494 3/4 area that it recently reached over the last couple of weeks. December cotton has been quite volatile over the last several weeks. With the speed at which it dropped, it moved at the same speed on the way back up. And here we can see the market falling again at the exact same speed at which it had declined before. These fast moves on either side of the market suggest that there is a bit of indecision. Additionally, we can see that the market did come in and make a lower double top in comparison to the previous top that it made here. And so now the ability for it to come back up and actually touch that 76.64 is potentially in question, although the market now is coming into our make or break region. And as long as this market is able to hold somewhere in this area between 71.20 and 71.60 and make a bounce off of here that happens to coincide with it being oversold, we still believe that there could be one more leg to the upside that could potentially challenge that move up to about 76.64. We do have a key time factor coming in, May 28th. And so if the market continues to move down into this time factor, make a significant low that does in fact coincide with being oversold, these complementing pieces coming together all at once suggest that a significant low can be made at that time horizon, at which point if the market does in fact reverse from here, it's a potentially pretty good trade to play with the stop below the reversal point with a target up at that 76.64 area or region itself. Again, the market now does sit at a very key level, and so from here we do suggest exercising caution, but we are sitting at a couple key important thresholds, both in time and price, that could suggest the opportunity for a turning point in this contract. Coming up from its recent lows, the September crude oil contract has now reached the target of 52 that we had talked about previously in terms of a minimum price objective. The market came up and came very close to 52.28. We also see that a time factor now is coming in of May 26, where the market can look to reverse back down. And that happens to coincide with the market already being in an overbought position. So a move to the downside for this contract between now and the 26th to begin would not come as a surprise at all. In fact, we're probably looking for the market now to make a correction that makes a move at a minimum down to about 49.40, potentially a little bit lower than that, maybe 49 even, and from which point the market can then look to make another leg to the upside. But the move that we're looking at here is potentially coming to a pause. And so if we are long this market and we have not taken off profits off of this level here near the 52 mark that we suggested before, at the very least, we should be moving our stops up below this market in the event of a downturn. We continue to like the way in which this market has been moving, and we do have a handful of time factors coming into the future, where we have June 22nd as a potential opportunity for a market turn, and just before that, a few days before, for a potential turn opportunity as well. We also have price bumping up against our one-by-one upside angle, so the capacity for this market to actually continue higher from here is a bit suspect, and so we'll continue to track to see what happens. And in addition to that, what we're looking at is the potential for a mirror move opportunity. By way of a mirror move, what we have is in between here is a nice leg to the downside, with the market making a reaction to the upside on this side of the market that mirrors this move on the other side, where we have the market again touching up against the one-by-one angle. And so these two areas here are basically our mirror moves, where this move here is a mirror move of this side here. So we'd be looking for a potential move to the downside as suggested before. That could maybe replicate the move to the upside that we see here on the opposite side. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again.